able to get better terms than that. So in a weird way, yes, getting into the NASDAQ 100 does improve credit rating and does improve kind of your position, if you will, kind of is like a stamp of validation in the traditional financial system. But actually Bitcoin gave him that already. And so it's like TradFi being like, oh, now we think this is validating, right? But if you look at the market determined that Bitcoin was more important than the NASDAQ 100 because having the underlying Bitcoin exposure gave him the ability to raise these converts at very, very attractive terms. And so if you go and you ask an analyst on Wall Street, they're like, oh, he's now in the NASDAQ 100, right? But if you go and you look at the convert market, actually, they don't care. Like they've already been giving him, pretty insane pricing terms because they're like, hey, what we want is not another company in the NASDAQ 100. What we want is a company that's giving us exposure to Bitcoin. And so this is like a classic paradox of kind of traditional financial system and Bitcoin system meeting each other, is that where the market clearing price has been is actually in favor of Bitcoin. But there's still a lot of people in the traditional system that they're waiting for these kind of traditional milestones to be hit. So there's some investor somewhere who didn't have exposure to MicroStrategy, but now they're excited because now they're in the NASDAQ 100. It doesn't matter though, right? In the grand scheme of things. And so again, asset prices are going to the sky because they're devaluing the currency. They can play all these games with CPI measurements. They can rebalance baskets. They can send people into the grocery store with tablets to count, baked beans with no sodium, and do whatever they want. Inflation is the measurement of the increase of the money supply. And if I look at the Fed's balance sheet, it's going up $1 trillion every 100 days. These people have lost their minds. And so if you're going to keep jacking up the federal debt and you're going to continue to devalue the currency, right, by the best case analysis that I've seen, not probably was actually accurate, but the best case using the government data, the US dollar has lost more than 25% of its purchasing power since 2020. It's insane. So you look at it and you say, oh, the stock market, Bitcoin, all these things, they're just responding to the change of the money supply. So if you are watching this stuff go up, you're saying to yourself, what's happening? You're not smarter than the market. The market is understanding what's occurring. And so inflation is not 2.7%. 2.7% is bad. And it's still, real inflation is higher than that. And so if you're an investor and you're sitting in cash, you're getting screwed. It's like very simple. And so I think people want to make it very complex. Like, oh, the Fed's going to cut interest rates, do this. Like, dude, the Fed has no choice but to keep interest rates lower and to print money. Fed hikes, Fed prints, or Fed drains. Asset prices are going higher. And so this is a very simple test. Did you invest or did you not?
That is I think boiling it down to investors and non-investors is a great way to think about it. I'm also wondering, is there, and I don't know the answer to this, maybe there isn't an answer, is there a best case scenario for what the Fed should be doing?
I think that the Fed is in a lose-lose situation, because if inflation is higher than 2.7% and you cut, inflation probably comes back. Okay. If you sit there and you do nothing, then what you really are betting on is that you have some minute control of the economy, and they don't. If you hike, you basically lose all credibility with the market, and you probably push us into a recession. So if you think about how do you solve this problem, it's not in the Fed's hands, because the Fed broke the market. It's like, if you are out with your dog and you're going for a walk, you're the Fed, the dog's the market. And the Fed used to walk the dog. Now the leash broke off and the dog's running wild. Guess what? The dog's walking you, even though the dog don't got a leash. Better late than never. And they say we're going to hike interest rates. They're able to hike interest rates up over 5%, and they don't push us into a true recession. NBER, they're full of shit. We did have a recession for 2 quarters, but in terms of like a massive crash, a big crisis, et cetera, we don't get that. Again, solve the short-term problem, probably cost us more in the long term. F on the long term, A+ on the short term. So they were able to navigate basically 4 years. They were dealt a hand, and they dealt, and figured it out. Now they're starting to cut interest rates. You can see capital flowing back into the market. You can see asset prices going, right? The question is going to be, can they do this without reinflating inflation? Probably not. Maybe they can do it less inflation, but probably not. And so at some point, remember when they were getting an F on the long term? How do you measure the long term? You got to pay for your sins. You didn't study for the test. You don't pass the test. Question is 2025 the test time? Does the Fed have to take the test finally? We're going to find out. And the crazy part is it's like taking a test with a partner and you don't know whether they studied or not because the politics came out better. Now, the gap is so wide that for 20 or 30 years, if you have to pay $1,000 of carrying costs versus a couple $100 of renting, it's a big, big gap. And so the question is, how long can you do that and still come out on the right side? Now, one of the things that is also happening simultaneous to that is obviously the home prices are appreciating significantly. And so it really ends up being a evaluation of cash flow versus capital appreciation, monthly expenses versus future capital value. And right now, unfortunately, there's a lot of Americans that say, I can't afford to make the short-term sacrifice that is required to buy the home, even though I know that there's supposedly this big payoff at the end. The short-term pain is too much. That gap is too big, right? It's widening. So I'm going to rent. Now, here's the crazy thing is there's a sense of security in owning your home. There is a sense of pride in owning your own home. I rent. I've bought homes. I rent. I bought homes. Done both. Renting is less mentally taxing. And so again, goes back to we have the ability to build the homes, get the regulators out of the way, whether it's local city council or housing regulations, remove them. Now, it doesn't mean, hey, just go build whatever home you want. It can look like whatever you want with, there's no standards or anything, but remove the onerous ones, put very simple things. I always laugh. I say, why is it that every single regulation in the housing market is like 27,000 pages? You get one page, write it on one page. Be very clear. If you can't write it on one page, then what are we doing? And so you can get one page for zoning. You can get one page for, house specs. You can get one page for you just go through this and you say, okay, people are like, oh, you can't do it on one page. All right. Well, if we're at 27,000 pages and I'm asking for one, maybe we settle on 10, but that would be a big improvement. Right. And so it's that type of stuff that you just have to kind of go at this and say, okay, how do we actually increase the housing supply? Because if we increase the housing supply, prices will come down. Huge problem. We should have a Doge for housing.
I was about to ask you, is Doge the trick that will get us moving in the right direction? I
don't think that they're focused on that type of stuff. I think they're more focused on the abuse, fraud, and waste. And so things like these types of regulations, they kind of, they're just good enough. It's like if you have a group of kids and you say, which ones are the bad ones? Which ones are the mischievous ones?